Mike, good to see you today. I hope you're doing well.
We are.
Yep.
Hopefully you too.
Yes, yes, indeed. What do we want to talk about today, Mike?
We are talking about 5 reasons why real estate is the ideal investment.
The ideal investment. You and I have found that, and we want to share that with others so they can get an ideal investment too. Yes.
That's right.
And you have a story about not being in an ideal investment several years ago, you and your wife.
That's right. We just spent the week at the beach, and on our drive home, wife looks down at her phone. She's playing on there and looks at her stock, see how her 401k is doing, and she finds out that the stock has dropped from $70 a share down to, I think it was like 55 or 45. It was just a huge drop. And and she was scared. And she didn't know, all of a sudden she goes from enjoying a week on the beach to now she's in panic mode about our nest egg. Where are we going to have the money for retirement?
Mhm. And that's probably a story that almost anybody that's listening to this can share as well in their own life when something they've invested in is a lot of volatility and dropped in value significantly. And although today, when we're recording this, the stock market went up remarkably, sometimes the stock market's really good, but sometimes it's not very good.
That's right. It's kind of like, I think Forrest Gump said it best: life's like a box of chocolates. You never know what you're going to get.
And you and I have discovered that real estate actually gives a lot more stability to our investments, our nest egg, and has some real benefits that other investments like stocks or bonds or gold or Bitcoin or whatever else doesn't have. We're going to look at it as an ideal investment.
That's right. And the reason we say ideal is that it's an acronym. It has benefits from income, depreciation, equity, buildup, amortization, and leverage.
Yeah, so
And
ideal is that five benefits: I,
yes,
income; D, depreciation; IDE, equity buildup; amortization, because we use borrowing in real estate to our advantage. And then L is leverage. We'll have to talk about what that
right.
means. Yep.
Okay, we
Yep.
will. So, and as we get closer to retirement, or for those who are fortunate to get out of the rat race earlier, we're looking for a way to transition from growing our portfolio to also providing an income front for us. So we want that portfolio to be providing a sizable income stream.
Yep. And again, gold doesn't provide any income. Bitcoin doesn't provide any income. Bonds do provide some income. Sometimes stocks do, but real estate can really provide a significant stream of income for us.
Right. And so that's the first of the ideal is the income. So we want the income to provide for our desired lifestyle. So let's talk a little bit about net income from rental properties.
Yeah, so the income there, for those of us that are passive investors that are limited partners, particularly in a multifamily, comes as you call it mailbox income there, don't you? There it comes
That's right.
once a month, once a quarter, and you don't have to do much to get it. Your money's working for you and providing an income. And yeah, the folks that are renting those apartments are providing that income. You've got some expenses.
Right.
It's the net income that comes back to you as an investor. Yeah.
And then there are ways to increase that net income.
Mhm.
Yeah, so the property manager or the asset manager is going to go in, they're going to make improvements. You want to have an effective management, and that will help increase the income over time. So as inflation increases the value of the property, it will also increase the rents, and you'll be able to increase your income stream.
Yeah, and that's important to us, particularly in retirement when we want this passive income where we don't have to punch a clock or go to work. Because coming in enough to keep our lifestyle going the way we want it to go. And real estate
Right.
can do that for us. It's doing it for you and for me at this point.
Right.
And the D in ideal. So income is the I and D is what?
Depreciation.
Depreciation. You mean, what do you mean?
Yeah, that's it's like a paper loss, but it's actually a benefit that the IRS allows us. So we can write off a portion of the cost of all the improvements on the property. So, for example, if a build, if with a building, you can write off the cost of the building over like 27 and a half years. With a single family house, that's the way it works. With apartments, you have the same time frame, but you can front load it so you can write off a larger portion earlier in the process.
So
So we call that accelerated depreciation.
what's the benefit of depreciation for people like us, Mike?
Well, for example, last year we had other income, but also took some profits, and I made an investment into a partnership. So with 100,000 investment, we ended up with a 35,000 depreciation allowance.
And how
So
does
that
it
means
benefit you? Yeah.
that means I took 35,000 of that depreciation, and I was use that to offset other income. So that reduced my taxable income by that 35,000.
Yep. So you're spending less dollars today because of that depreciation. And again, gold doesn't depreciate in that way. You can't write it off. Uh, Stocks, you can't write off depreciation. Bonds,
Right.
Bitcoin, real estate, you can. The government wants us to own property and run businesses and help people get housing. So they provide this tax benefit.
That's right. And it's more cost effective to implement those accelerated strategies. You can do that with a cost segregation analysis, and your operator can do that for you. So,
Whatever cost segregation means, Mike, but I'm
yeah.
glad depreciation is in there that
Yes, that's the key.
yeah,
Being able to depreciate the property.
there you go. And E, what's E?
E is equity, equity buildup.
Hmm. So when you buy it, the money you put down is equity. How do you increase the equity? How do you build up equity?
A couple of ways you can go in, make improvements.
Mhm.
So if you buy a rundown building, or if it's less than optimum, you can go in, make improvements, and then you find tenants who are willing to pay more for those improvements, so you can raise your market rents.
Yeah, I'm invested in a property up in Atlanta, and they tested out making some improvements in the apartments, and then tested out what they could rent those for, and they were able to increase the rents and therefore they increase the income on that property because people were interested in those improvements on that. So it's a way to increase the equity because in a multifamily apartment complex, the equity is a multiple of the amount of net income that you make every year.
That's right.
That's how they're valued. So if you bought stocks, hopefully it's gone up and you've increased your equity in the stocks. If you bought gold and gold prices have gone up, you increased your equity in that. And real estate does the same thing. One, by things you do, and two, by just market appreciation, huh, Mike?
That's right. How many of you have seen how rents went up, or have heard how rents went up in the last few years?
Mhm.
And as the rents go up, then the income also goes up.
And if the income goes up, then the value of the property goes up, and so your equity's gone up. So
That's
yeah,
right.
increase the real estate allows you to kind of be in control of increasing the equity along with what happens in the market. So we
That's
got
right. And that's when it does give you a little more control as an asset. You have more control with that with real estate because you are controlling the investment. You control what you do with the property to make those improvements.
Yep. So find a good operator that knows what they're doing to make the right improvements on property, and your equity will increase. So we've got income, depreciation, equity, and then Amortization, the A in here.
That's right. And some of you have seen an amortization schedule, maybe when you bought your house,
Mhm.
and you see how much gets paid down over time. It's not very much in the first few years. And then if you look out around year 25 to 30, all of a sudden, more of that payment is going to principal than interest. But in the early days, the bank is making their money on you.
But amortization just means when you're making a payment on that, we borrow money to buy real estate.
That's right.
And
And it's
every
that
time we
principal
make a
that,
yeah, every time we make a payment, uh, some of that actually comes back into our pocket as a principal.
that's right.
Yeah. And
And who is paying for that?
who's paying for your loan to get paid back, Mike?
That is the tenant. The residents are the ones because when they pay the rent, one of your primary expenses there is that mortgage payment. And so a big part, I mean, some part goes to interest and some goes to pay down the principal, and we amortize the loan down.
Yeah, I'm my own renter in my own house when I used to when I before before retirement here. And so yeah, I was the one paying it down. But now I let other people pay down these loans that I take out on the apartment complexes. And
That's right. And
that,
in the process, that interest expense is also an expense that reduces the taxes.
oh, another
So
another tax benefit of owning real estate versus stocks and bonds or gold or other things.
that's right.
And the L here actually ties back into that borrowing money to buy real estate versus paying all cash for it out of our own pocket. The L is leverage.
Yes. And there's the leverage is significant in real estate. And that's the one thing that really makes it a powerful investment for building and accumulating wealth and preserving the wealth.
Mhm.
So, uh, as an example, let's like how many of you, I mean, when you bought your last house, maybe someone paid 200,000 for the house, but they only had to put 40,000 down.
Okay.
20,000 down, 80% mortgage. And let's say that was about 10, that might have been 10 years ago.
Mhm.
And what is that house worth today?
Probably 400,000, at least help.
Okay. So maybe 400,000. So in some period of time, you have gone from 20,000 in equity to 220,000 in equity. And you did that with leverage because you only had to invest 20,000, but that 20,000 in equity has become 200 or no, 40,000 equity became 240,000 equity because of leverage.
Yeah. Wow. So you got a five times. Anybody get five times what you put into your stocks 10 years ago? Five times that you have now? You might have two times that. You might have three times that. But real estate with this uh, loan to value piece here, you might be hitting a five times increase in your net worth, the equity that you have out of your investments. Wow.
That's right. And so here we're talking about being able to do that as a limited partner. So it might not be five times. We might be, our leverage might be 3 to 1 instead of 5 to 1. But we're able to use that leverage to capitalize and maintain our growth and increase our equity.
Yeah, and although you can buy stocks on margin, usually it's a 1-to-1 ratio with that, and they can
Right.
call it at any point if the value of yours goes down. Uh,
Yes, we can leverage to a greater point and still maintain, you get some cash flow out of the property here.
yep. So a wise, experienced, excellent operator that is going at this in the right way can really use all five of these. Get you some income, get some depreciation, so you're paying less in taxes.
Right.
Increase the equity that you've put into it, whatever your investment was. Some of that is by the amortization of the loan, and use leverage to really multiply your investment bigger than you can do with many other asset classes.
That's
Nice,
right.
nice.
So, so as we compare real estate with some of the traditional investments.
Yeah, let's do. We've done that kind of along the way here, but my grandfather taught me, he took me down to Merrill Lynch and I'd watch the ticker tape run across sitting on a seat with him back in the Merrill Lynch office. So he taught me how to invest in stocks and pick stocks, and we began doing that. He also taught me about investing in real estate. He was a landlord himself, had several rental properties. He taught me that, both of these, and basically his real estate did better than his stocks.
Interesting.
Yeah.
So we found the same thing.
And he told me the reason that real estate was important to him because he lived through the Depression. And he watched so many people that when the stock market crashed, they lost so much. But those that owned land, owned properties, weathered through the Great Depression quite well.
Yeah, and that makes sense because people need a place to live.
Yes, yes. So how does
So,
real estate compare with stocks and bonds, Mike? What are some other comparisons?
well, you just talked about the volatility. We've talked about that, how it can go up and down so much in a short period of time. And the stocks and bonds don't have the depreciation or amortization benefits that you do with uh, real estate.
Mhm.
And then we have the capital gains tax treatment. So you do with stocks, you can have capital gains benefit if you held the stock for over a year. You can get that with real estate as well, but real estate also has another option, and that is a 1031 exchange, which is really like playing Monopoly with real estate.
What do you mean by that, Mike?
Well, in Monopoly, when you sell a house, when you sell a house, you can do what's called a 1031 exchange and trade that into a hotel. 4 houses and a little more cash, you get a hotel. Whereas if you want to do that in the stock market, first you have to pay taxes on your capital gains before you go buy something else. And that takes money out of your pocket. But the 1031 exchange lets you just swap money from one house into another and delay paying taxes until one of two things. You can either when you sell the property eventually years later, or if you pass away holding onto it, then you can pass it to your heirs and they get stepped up basis. But that's
Yeah, so these are some technical things here, the 1031 exchange. I didn't know anything about that several years ago, and I used it just in the last several months here when I sold a property and 1031'd it into something else. And I had doubled my equity on that property since I'd owned it, and I don't have to pay any tax on that
you probably
until
save thousands of dollars in taxes alone on that.
thousands and thousands of dollars in taxes. Yes. I'll pay them eventually, or I'll 1031 it into something else later. We'll see.
Okay.
Yeah, so those what are the advantages of multifamily over single family real estate, Mike? I'm thinking back to those that remember 2007, 2008, 2009 and there when single family really took a nosedive. What happened with multifamily during that period?
Yeah, that's a good question because that was before we started buying the multifamily so much. But I mean, it created buying opportunities in the single family world, but in the multifamily, people still needed a place to live. And so if people lost their home, a lot of them had to move to an apartment somewhere. So
And the multifamily mortgage defaults during 2007, 2008, 2009, and there was so much lower than single family defaults. They're very stable during that period, amazingly stable during that period.
and thinking about being a landlord, what's going to be more stable, having a few houses and you have a vacancy. Now your vacancy rate maybe 25 or 33%. If it's your first house, it might be 100%. Whereas with the multifamily investment, if you have 100 units and you have even 5 vacancies, that's only 5%. That's a great reduction in your vacancy rate, and it spreads the risk. It's a risk reduction.
Yes, yes, indeed.
And so you're able to obtain these 5 uh, benefits of real estate through the multifamily, and an operator is able to help optimize those for you.
Yep, there are other benefits other than these five, such as we talked about. There's more control that the operator has on this than we do on a buying stocks. And you just mentioned there that we've got a scale when we're in multifamily that allows us to have a vacancy not have as much effect on us as it does with just owning one piece of property. Got it? Yep.
Right.
Good. So,
So
yep, Mike, we were thinking about helping people realize that real estate could be an ideal investment, but first they got to get into real estate if they're going to maximize that investment and get these ideal benefits. If you don't own any real estate, you can't get any of these ideal benefits out of it. So you gotta learn as much as you can and get invested in real estate.
that's right. Make a commitment, and then a few 3 steps here. Get some education,
Mhm.
and think about where you're going to get the funds. You may have money or stock somewhere you want to sell. You may have a retirement account that you want to use. You can use IRAs or old 401ks. So not necessarily where the money is sitting right now, but it can be used. You can tap into those retirement accounts,
Mhm.
and you can hold property within the retirement accounts.
Yeah, and we've been talking here not about you becoming a landlord, not about you managing property, not about you taking on another job, but you being a limited partner, a passive investor in multifamily and apartment complex somewhere. And you don't have to do all that work. You just get these benefits.
That's right. That's
And
one of the
those,
wonderful things about this is
yep,
somebody else gets to do it for you.
yeah, and those of us that are general partners or operators, we enjoy what we're doing, but it takes some time. But as a limited partner, you don't have to put in that much time. You can do it.
That's right. So then the next step is finding an experienced operator to work with.
Yeah, and we're not pushing ourselves here, Mike. We're just saying to people out there, be sure you find somebody that has experience, is good at it, has a great team, or is buying properties the right way and financing them the right way and knows how to operate them well, and then join them in that.
That's right.
Yeah.
So that means less time required by the passive investors, and then they can have the professionals be working to obtain those greater returns
Mhm.
by balancing and optimizing the ideal benefits that we talked about today.
So, what are those ideal benefits again, Mike? They're more than these, but
Income,
Mhm.
appreciation,
Okay.
equity,
Yep.
amortization,
Yes.
and leverage.
There you go. Those five are there in real estate, and particularly so in multifamily real estate for sure. So Mike, wrap this one up. I think we've shared that with folks today.
I think we have it. And yeah, it's, once wife and I decided to diversify more into real estate, it really helped us with our total portfolio. And my wife felt a whole lot more secure about where our money was going to be coming from, uh,
Yep.
once we got into retirement.
Yep.
So
So folks that are anticipating retirement or early in it or wherever you are in it, if you haven't already, explore real estate because it has some wonderful benefits for you and for your family.
that's right.
Mike, good to see you today. Hope this was helpful to everybody else. We'll catch you again sometime.
All right. Thank you.
Bye-bye.
Goodbye.